Benchmark, the voice of business. Presented by LMD.
On this edition of Benchmark, our guest today on Spotlight, Kishan Vairavanathan, the Managing Director of Asset Line Capital, provides some insights into the capital market landscape in Sri Lanka. Up next, LMD columnist Hassa Premarathan discusses the market's reaction to Budget 2019. And staying with the government's budget proposals, we have more on this from Krisha Piris, the Product Head of Economic Research at Frontier Research. That's the lineup for Benchmark.
Hello and welcome to your fortnightly Big Picture Business Program Benchmark. I'm Savitri Rodrigo. Today we are exploring Sri Lanka's capital markets, and on the program today, when we do that, there are some questions that spring to mind. How can Sri Lanka restore foreign investor confidence in its capital markets? Are SMEs able to utilize or use the capital markets positively for their betterment? And also, how will our new budget proposals impact the market? So, we are going to get some answers from our guest on Benchmark today, Kishan Vairavanathan, who is the Managing Director of Asset Line Capital. Welcome, Kishan. Good to have you on the show. Just from a broad perspective, what is your assessment of Sri Lanka's capital markets at this point in time?
So, I think the biggest issue has been the lack of development of products. We are still sitting on very few products. You have a share market which has very little option other than just buying and holding shares. You have listed debentures which were supposed to drive the market, especially commercial debentures, but that's not liquid at all. So that is an issue. You've got nothing like REITs and other options to go to. The private venture capital and private equity markets are almost non-existent in Sri Lanka. So I think the biggest problem has been the lack of products and the lack of inflows of foreign investment into the country over the last few years.
Have global trends impacted the local capital markets?
Of course they have. There has been, with the political uncertainty towards the end of last year and the depreciation of the rupee, which you've all heard about, around 15%, there's been an outflow of foreign funds from both the share market and the government treasury market, or the bond market, and so that has really impacted the capital markets. And this year, if you're looking forward, you've got higher interest rates in the US, you've got a move globally from emerging markets to the US. Oil prices are rising slowly. The combination of all these would probably indicate that the flow to emerging markets will be muted this year, and Sri Lanka is going to face that issue.
You know, the budget deficit targets 2019-2020 at 4.4% and 4.8% of GDP. Fitch Ratings also stated that there remains risks to the government's fiscal projections, which could rise if the approach of a presidential election due by 2019 triggers renewed political tensions. Now, no Sri Lankan election has ever gone without political tensions, so that's a given. In your opinion, how will Budget 2019 proposals impact investor behavior?
So I think at the moment there has been very little impact across the board because a lot of people are not sure how many of these proposals are actually going to be implemented. And if you look at the last 2 or 3 years, you can see why people are a little concerned or skeptical about as to how many of them are going to be actually implemented. If they are implemented, then there may be a little bit more consumer demand. It's an election year and there may be a little bit more liquidity injected into the system. However, given the fact that there's going to be some political uncertainty, given the fact that the country is facing challenges fiscally, I believe that there won't be an immediate impact on the capital markets. There may be a marginal increase in interest rates, and I just can't see during the first half of the year any impact on the capital markets.
Now, the central bank detailed that $30 million was the net outflow, foreign outflow, in just November 2018, obviously as a fallback from what happened in October. how can Sri Lanka restore foreign investor confidence? Now, this I'm asking you because it almost may seem like a crystal ball question, but how can we do that?
So I think consistent policy is probably the number one issue. I think what investors look for from abroad is the safety of their money. So a more stable currency would obviously be a big help. But I think in terms of taxation, in terms of policy, if they can see consistency, then they'll probably be a lot more confident. In addition to that, what they would like to probably see is a commitment from the government to capital markets in terms of allowing, at least in a gesture form, maybe some of the government institutions to again start investing judiciously in the capital markets, maybe encouraging the listings of some companies, and some fiscal restructuring, which would give confidence to people that the move towards more fiscal responsibility is on the cards.
Do you feel the government is paying enough attention to the role that capital markets can actually play in the economy?
I think the government's got a lot of pressing problems at the moment, and maybe the capital markets have been one of those issues that have been on the back burner for some time. And there also were some negatives when they inherited the capital markets in terms of various questions about the players in some of these capital markets. But I believe that they will have to make a commitment going forward, because without that, I think it's very difficult to develop an economy and not develop your capital markets, especially to disintermediate some of the banks, which are quite narrow in their outlook towards lending, especially to certain sectors of the economy. That process will have to begin soon, and they need to do that if they are to move away from 4.5% GDP growth to something north of, say, 5.5%, 6%.
If you're looking forward, which segments actually have potential for future growth?
So I think tourism and especially tourism related sectors really need to be developed. There's a lot of scope in that area. I think at the end of the day, if this country is to develop and grow, infrastructure needs to come back again. Government is going to have to spend, the private sector is going to have to invest. So I do believe that that sector once again will have to start showing numbers that make it attractive. Some things like price controls need to be looked at, because some of these companies are being held back by more populist price control measures. So those are things also that a government needs to look and see how they can balance public good against the good for the growth of the economy. So these are things that they will have to look at, but those two, I would think, going forward would be the two sectors that I would like to concentrate on. And given that this is an election year, you may find that consumer demand may pick up a little, especially if there's increases in maybe pensions or government sector salaries. So some of the consumer companies also, like Hemas, for example, may start to do better towards the middle end of the year.
Let me get back to you with a few more questions. We pause for a commercial break now, and when we return, we ask Kishan Vairavanathan how effectively investor forums actually entice investors into the capital markets and whether they are effective in the long run. So stay tuned to find out.
When we entered the industry in 1995, a new star was born as a fully owned subsidiary of People's Bank. For those seeking to grow their businesses, PLC provided the seed. We are not only Sri Lanka's #1 leasing company, but also the largest non-banking financial institution. Welcome to a new dawn for the nation. Introducing People's Leasing and Finance, PLC.
LMD is making waves, airwaves. The next big thing from Sri Lanka's pioneering business journal, LMD Podcast, now online. Listen to our articles on the go at www.lmd.lk. Select, play, listen. It's that simple.
Done. 1,500 go. Hoorah!
What on earth are you doing?
I'm making money.
You're crazy.
Crazy for money. 10,000 steps done. Who the man? I do it every single day. Show me the money.
So you run 10,000 steps every day, huh? You must be fit.
Some days I do 20,000. Hoorah!
You're with Benchmark and we're talking about capital markets with Kishan Vairavanathan, the Managing Director of Asset Line Capital. Kishan, are adequate measures being taken to enable SMEs to optimize what capital markets the capital market can give them? For instance, the SEC, the CSE recently launched the Empower Board. Now, is it being optimized, so to speak?
So I have a slightly different opinion. I'm not so sure that SMEs are going to be successful coming straight to the share market. I think there's a whole process for SMEs to go through before they become eligible to come to the share market. They need to grow, develop, put in place proper governance, mature, become sustainable before they can really move to the level of obtaining public funds, especially from smaller investors. So I think there needs to be a series of steps that need to happen first, and this is where venture capital, private equity, bridge financing, these areas need to be developed in this country, so that these wonderful ideas that some young people have and these small SMEs that need to grow can turn to these people, and that is where the risk capital really comes in, and that matches the type of risk that people have to take with SMEs. Then we need to then move on to the fact that we need specialized companies, finance companies that lend to SMEs. They need to be properly regulated. The government needs to make sure that the depositors are protected when this happens. Plus that both the people who put the money into these finance companies and the people who are borrowing from it are protected. If that happens, then I think the pathway towards coming to the share market is open. And I think, as everybody knows, in most countries, this is the backbone of the economy, these SMEs. And I think if that happens, then I believe that there'll be this successful progress, and then the boards and the CSE will benefit from this.
The Invest Sri Lanka Forum, organized by the SEC and the CSE, they've done the gamut from the US to Singapore to Australia, New Zealand, Switzerland, India, Middle East, UK, etc., to attract foreign investors. In your view, how effective are investor forums when it comes to actually engaging foreign investors?
So there, I believe that these investor forums, there's a case to be made that from a more macro level, that they would be useful in raising the awareness of the country. But from a micro level, if you think that that will really start investors pouring into the country, I think that's a little naive, or that's a little difficult at the current time. If you really want investors to be coming to this country, then I think a more one-on-one approach is probably going to be more profitable or better. So that, I think, is that these investor forums, for them to start producing results will take some time. I think the country needs to move to another level before they start drawing in the type of results that people are looking for.
Now, in 2013, the SEC introduced a minimum public holding threshold, but by 2018, 31 listed entities were non-compliant. When it comes to regulation by the regulator, do you think we have sufficient regulation, and are there still loopholes that people can get around?
No, I think over the last 4 to 5 years or somewhere in that area, there has been a huge improvement in regulation, in surveillance. So I have no issue with that. I think at the same time we need to understand that we cannot kill the goose that lays the golden egg. So I think we as an industry need to go to the government and explain to them the need to grow the capital market. So in hand with this increased surveillance and regulation, we need to be able to offer people the products and services that actually make up for the additional costs of surveillance regulation. I think most people would agree that transparent, honest markets are necessary, and whatever that has to be done to achieve this has to be done. But at the same time, what we need to do is we need to really go out there to the government and tell them that we also need more vibrant capital markets, we need greater liquidity, we need to go out there and get some of these big companies to list, and we need your help to do that.
Now, in a bid to promote better practices or best practices in our capital markets, the CSE published 6 recommendations last year to assist listed companies in addressing environmental, social, governance areas. Do you think there's adequate focus on sustainability when it comes to our capital market?
Yeah, I think most companies, as you know now, focus on profitability. So I think to a great extent that cannot be helped, that a lot of us actually look at the bottom line at the end of every quarter, at the end of every year, and that's how we are judged. So that is something that is global, and that's something that's just natural. At the same time, I think there is a greater understanding now that the environment, there's a greater understanding that the long-term sustainability of a business depends on the actions of companies. I think people take their CSR functions much more seriously now. You have quality people handling that. So yes, I think there's a growing awareness in Sri Lanka as well that sustainability of earnings depends on a lot of things, and including looking after the consumer. So I think that knowledge is growing.
Do you think worldwide the shareholder or the investor is focusing on things like the triple bottom line, for instance, when they are looking at investing?
I think educated investors are, and you can see that in the growth of these environmentally friendly funds. Now there are unit trusts, there are funds that you can actually invest in which tout as their greatest asset these issues, but that is still something that I believe still is a minority, that I think people need to move towards that a lot more. But in time, that's the direction is right, but there's a lot more that has to be done.
Thank you, Kishan. That was a rather succinct overview of what we are to expect. So thank you for being with us on Benchmark.
Thank you for having me.
So we've been discussing Sri Lanka's capital markets and a little more germane areas with Kishan Vairavanathan, the Managing Director of Asset Line Capital. On the other side, we have Anushan Selvaraja with more.
Sri Lanka's #1 leasing company is now the nation's largest and highest rated finance company with 2 international ratings. Let us move the nation as one with People's Leasing and Finance PLC.
LMD is making waves, airwaves. The next big thing from Sri Lanka's pioneering business journal, LMD Podcast, now online. Listen to our articles on the go at www.lmd.lk. Select, play, listen. It's that simple.
Done. 1,500 to go. Hoorah!
What on earth are you doing?
I'm making money.
You're crazy.
Crazy for money. 10,000 steps done. Who the man? I do it every single day. Show me the money.
So you run 10,000 steps every day, huh? You must be fit.
Some days I do 20,000. Hoorah!
Welcome back to Benchmark. I'm Anushan Selvaraja. Now for a closer look at the latest on the boards. Joining me is market analyst and LMD columnist Hasita Premaratna. Welcome back, Hasita. Now, Budget 2019 is out. How has the market reacted to it?
Yeah, actually the market did not react too much to the budget for two reasons. One is that obviously things were not looking too good in the market in general. The sentiment was negative leading up to the budget due to multiple reasons. And in the meantime, budget also did not have too many surprises either on a positive or a negative side. So it was more or less like a fairly consistent policies continuing with not too many big surprises. So as a result, we didn't see too much of a reaction from the market in terms of the budget proposal. But having said that, the overall sentiment in the market have been negative. And we've seen the index coming down gradually from the 5,900 levels few months back down to about 5,550 levels. So it's a kind of a steep gradual drop that we are seeing, and unfortunately I think the sentiment still stands not so positive.
Given the contents of the budget, what would you say are the areas that are ripe for investment?
Yeah, so if you look at the fundamentals, I think the sectors like construction, tourism were given some boost, especially construction, which definitely had a positive light, which I thought was good. But in the meantime, we also saw auto industry getting significantly negatively impacted, which is something that concerns the overall auto market. Apart from the auto market, the other big thing about it is that the 48 billion was supposed to be collected from the additional taxes on the auto industry, which I thought was a little bit high, and due to the price elasticity of demand, naturally the volumes will come down due to these high taxes. And I think once the volumes come down significantly, whether the government could really collect that amount of revenue from the auto industry is something that is doubtful. From an investment perspective, or the other good thing is that there have been a lot of focus on the entrepreneurship as well as on SME side of things, where there were a lot of incentives and government backed loans through the commercial banking system were introduced, which I thought was good. And those plus a few of the other policies that have been consistent across the last couple of budgets. Again, that's an important thing, because when you talk about budgets, one of the things that we expect is to be consistent with the past.
Now, do you think the measures brought in are a way of controlling the spread of the automobile sector?
But it is a way of controlling on one side, you can look at it that way, but it also has an implication on the overall structure of the country and how it's being spread out, because auto industry, whether we like it or not, is one industry have been doing reasonably well despite the shocks, and people have been graduating from a bike to a motorbike to a three-wheeler to a Maruti, etc., and going in. So there are two segments in the economy which have been actually taking it. So naturally the implications of that have been the oil bills going up, the roads getting congested, so those problems are there. So there has to be some level of control, but I think it's a double whammy to the auto industry, because on one side we've seen clearly that the rupee depreciation is hitting the prices, on the other side the taxes. So both coming within a course of 6 months horizon is something that will hurt the industry in the next 12 months for sure. But having said that, I think the permit side of things will help to some extent, and some curtailing has to happen, no doubt about it, but it has to be done very consciously, because at the end of the day, when you try to curtail through these different measures, it can also have a different effect on other angles of the economy.
Thank you very much for joining us, Hasita.
Thank you.
That was market analyst and LMD columnist Hasita Premaratna. We'll be right back after a short commercial break. Stay tuned.
When we entered the industry in 1995, a new star was born as a fully owned subsidiary of People's Bank. For those seeking to grow their businesses, PLC provided the seed. We are not only Sri Lanka's #1 leasing company, but also the largest non-banking financial institution. Welcome to a new dawn for the nation. Introducing People's Leasing and Finance, PLC.
LMD is making waves, airwaves. The next big thing from Sri Lanka's pioneering business journal, LMD Podcast, now online. Listen to our articles on the go at www.lmd.lk. Select, play, listen. It's that simple.
Sri Lanka's #1 leasing company is now the nation's largest and highest rated finance company with 2 international ratings. Let us move the nation as one with People's Leasing and Finance PLC.
Welcome back to Benchmark. I'm Anushan Selvaraja. Now we're going to take a look at Budget 2019, and joining me from Frontier Research is Trisha Pires, the product head for economic research. Welcome to the show, Trisha. Now, just to start off, what is your opinion on Budget 2019?
So there's a lot of positives and there are some negatives as well. I think one of the key ones is that a lot of people were actually expecting that it was going to be a very election-focused budget. So it's very positive actually that they have not been too focused on in terms of winning over the election, in terms of the fiscal loosening or anything like that. But they've been a little bit more prudent. There's been a lot of more focused areas this time, so it's actually a kind of a good budget in terms of overall macro stability. It's quite positive.
Could you just elaborate on the positives and the negatives of Budget 2019?
Okay, so yeah, as I mentioned, one of the positives is that it's very good for long-term macro stability. They actually tried to satisfy some of the IMF conditions, so that's a positive as well. But one of the negatives I would say is that it's possible that some of these things could change as we get closer towards the elections. They've actually been a lot more focused this time in the budget. So last time what we saw was they've tried to hit several broad areas, but this time they've been focused in a couple of pockets. So one of the key ones that they focused on was Enterprise Sri Lanka. So they've introduced a lot of small loan schemes within this as well. Another one has been that they've been focused on developing tourism. Of course, previous budgets as well has generally focused on this, but this time as well there's been a little bit more talk about it. They've removed the NBT on foreign receipts from tourist hotels registered with the SLTDA. They've also revised some of the economic service charges related to exports and tourism. So it's a positive in terms of that as well. Another industry that they've focused on actually is construction. They've introduced a couple of positives into that to boost the sector. There's been a lot of talk about the fact that the cost of construction is increasing. So to mitigate that, we've seen a reduction of about 30% on the NBT of imported materials. They've also removed some of the NBT on the construction contractors as well. So that's positive for the sector to help it to grow. Again, they've also tried to stimulate demand in terms of the foreign as well as the local market. So they've introduced things like residential visas for foreigners who want to invest more than $400,000. Again, even in terms of Enterprise Sri Lanka, they've had some loan schemes to encourage people to build houses and own their own homes. So it's positive for the construction sector in that. But of course, the negative side of it is that there's the VAT on condominiums above 15 million is still coming into effect from April.
What would be the economic impact on interest rates or the currency for that matter?
Okay, so in terms of interest rates, there's actually a bit of a negative impact. What we saw is that in the budget, they were expecting the debt financing to come majority from domestic debt financing. This time there's 92% that they've expected from domestic debt financing, which is a very high number. What we've seen previously, even last year, I think they estimated about 56% of domestic, but they ended up with about a little over 30%. So expecting 92% this year is bound to put pressure on interest rates as they need to raise more domestically. Also, whether that number is in fact realistic is also a question. So puts pressure on the interest rates. The LKR, of course, with the increase of import duties, things like that, they are trying to control the balance of payments pressure. So the LKR may actually be relatively controlled because of that. There's no reason for it to sort of have a high depreciation just purely based on what has been implemented in the budget.
Thank you very much for joining us, Trisha. That was Product Head for Economic Research from Frontier Research, Trisha Pires. Thank you for watching Benchmark, and we hope to see you again next time.